Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current. Mark, we have made it to the end of another week and another Friday. Welcome. How are you? How was the week?
Yeah, it was good. Good. Happy Friday. Happy, we'll say it's Bitcoin Friday, although Bitcoin's been it's like that meme where it's, poking this thing with the stick, do something, dead flat for the week. Talk about a bunch of different things, but just quick review. I did go back to the orange pants for Bitcoin Friday. I have the original sock game of the, Genesis block for Bitcoin. Why? Again, another handful of rest in peace Bitcoin eulogies. Bitcoin is dead. I think is now up to over 470. The searches for Bitcoin going to zero, all-time high. Searches for, there was another anyway, but all that. And then the other one, so I was in Denver yesterday. I didn't go to ETH Denver, but I spoke at a breakfast for a buddy who was out there for that. And he had an offsite function for protocol he's working on. It's actually very cool in the vaults space. And long story short, the memes on ETH Denver were crazy. Like people were saying there was no one there. And, it was like, they did a picture, an AI generated picture of, just a bunch of homeless people sitting in there and, a box of NFTs from 2021. And I don't think it was quite that bad. I did see a number of people, roaming around the hotel lobby. And my Lyft driver was talking about how he was picking up all the crypto kids. And I don't mean that in a derogatory way. They're just young people. And they're all trying to pay him in Doge. And so he actually opened a wallet and they, took a picture and they said they were going to post it. So, Doge is not dead, even though it should be. But anyway, so
that's such a random one, right, Mark?
The what?
That they would choose. That's such a random one, right? That in ETH Denver they would choose to pay in Doge.
I just think tribalism is just a thing, right? I mean, you pick a tribe and you're part of that tribe. I mean, I've got the Bitcoin sign, and there are ETH heads that have that, and then there are the Doge bros, and I don't know. It's interesting. I guess we didn't quite channel today. We got the green and the blue gray on, but I still think and we'll talk a lot about this, but the events of the week point to a really, I would say, acceleration of crypto broadly. I know the Bitcoiners get mad when you use that word, but crypto broadly, which includes ETH, which includes Solana and Avalanche and other things, Provenance. This was a big week for RWAs. It was a big week for, the first, right? Figure launched the very first native stock on blockchain with FGRD. And it's interesting because everyone's deep depression. Bitcoin fear and index is down single digits. I think it actually hit the lowest point it has ever hit sometime in the past week. Despite the fact that Bitcoin really didn't do much. I mean, it just kind of sat there.
And I saw that same stat that you probably did as well, Mark, on Reddit about the mentions, the number of times that Bitcoin is dead, and I had to weave that into the chart of the week, which I'm previewing now. But basically, like if you had invested $100 every time you had mention of Bitcoin is that it would be a fabulous number, which we'll reveal at the end. But
Yes, got to
it is
stay to the
more
end. Got to stay
than
to
you
the
would
end to
think.
figure out how rich you could have been. But therein lies another truth of investing, right? Is the discipline to do something every time, particularly when it's hard. And that is what separates the great investors from the others. They had an interview this morning with Druckenmiller talking about how he compounded 30% for 30 years. And, a bunch of it has to do with, well, you got to be able to, one, kind of admit your mistakes and just get out of the way and don't keep losing money. But more importantly, it's being able to, buy what's on sale and to force yourself to do things that you don't really want to do. Like I said, it's really hard to make 467 separate purchases. Most people, I'd say probably no one actually did all 467. But there are some that probably, followed a similar type of discipline, maybe not that one.
We, even at the Creek, we struggle with figuring out, what market signals may mean. But at the end of the day, we kind of go back to the fundamental of, we think of this as a long-term store of value, and, buying at a discount is fundamentally a good thing. But I want to return to one thing that you said, Mark, about kind of the tokenized element here and shouting out Figure, and why we think, and also many may think, this could be the catalyst for something big that's coming about tokenization, because now that our whole market, Mark, is about a 50% discount, we have to think about the next sort of boom that could be coming in. And if you remember, Mark, last month, we hit a high of 24.5 billion, according to CoinDesk, about tokenized assets. And, this is the process of just creating digital blockchain-based tokens to represent pretty much any real-world asset: cash, stocks, bonds, real estate, royalties, art, etc. And so what's cool about this, I think, also is that this is not a one or the other, right? So tokenized treasuries, which are part of U.S. debt, right? A figure of U.S. debt is 39% of all the tokenized assets, which I thought was an astounding
number.
Right?
Yeah.
So this could be an element of maybe lifting up kind of both laggards here, a slower to grow U.S. economy, and of course in our market as we face winter. So obviously BlackRock is heavily invested in this. They have put shares of their $2+ billion tokenized treasury fund on trade on chain using DeFi platforms. And of course, we've seen treasury market is now worth more than 10 billion. You've got a lot of people playing in there, even FT, Ondo, Circle, of course. So, this could be one of these super cycle elements here that could really drive this. And curious, Mark, we've been being in this room for a while, but what could Figures move now with including treasuries of their own? They're eating their own cooking, right? They're saying, hey, we'll start with us. And then once you see the benefit here, we can expand the market.
Yeah, look, I mean, this is the trend. And it's interesting because it was our only trend in 2018 when we launched our first fund at Morgan Creek Digital. It was called the Blockchain Opportunity Fund before we just went to straight Morgan Creek Digital. And that's because we believed that, and still believe that blockchains will disrupt financial services the same way that the internet disrupted media and commerce. And that is an extraordinary thing in the sense that financial services is the biggest market in the world. In fact, that was why these guys asked me to speak, because what these guys are building is a rail, a system, a blockchain based rail for creating yield based products, right? Vaults, right? You deposit assets, you earn a yield, and you basically blockchainize fractional reserve banking, which people get all squishy about that or gidgy about that. But at the end of the day, it is the great invention of modernity in the sense that, if you can use capital multiple times, that expands growth. And ultimately, the companies like Figure and what Figure is doing, and this is a vision that they've had, since 2017, here we are almost a decade later, finally seeing the emergence of what they were trying to do. And I think the cool part of this is open, right? The on-chain public equity network is an interesting advance of the concept that they originally said. They said, look, we're going to take this chain, Provenance, and we're going to replace DTCC, the Depository Trust Company, which is where all securities settle. And the crazy part is we're using 800-year-old technology, literally physical pieces of paper and file drawers in Dallas, Texas. And then we create electronic QSIPs, alphanumeric codes, and we trade those codes back and forth on screen. But the paper actually still sits there. And like, well, that's dumb. Let's have a digital, actual record of ownership that is permanently, purely digital, immutable. But it's taken 10 years to get there. But that's super exciting. And so the reason these guys asked me to speak was they said, talk about the globalization of bringing financial services on chain. And I said, look, it's one of the great trends of our time. And I don't know if that's hyperbole and all that, but I resemble that remark. But this really is happening, and it's happening in real time. And you said, treasuries, whether it's tokenized versions of money market accounts or whatever. But now we're talking about physical stocks, and it will go to physical bonds, and then it will go to currencies, commodities. And we've said for years, again, long before Larry Fink was saying it, every stock, every bond, every currency, every commodity, every piece of art, every collectible car, every case of fine wine, every piece of real estate, every private business will be tokenized. Because all it means is an entry on a ledger, on a blockchain, that is permanent, immutable, and decentralized. And this is the part where it's pretty amazing, right? Now you can trade figure equity, like the equity of the business, not some placeholder or some derivative, but the actual equity of the business, 24/7, 365, instant settlement. That's better than the New York Stock Exchange. No disrespect to the New York Stock Exchange. They've done a good job for, the 100 plus years or whatever. I'm not exactly sure how long they've been around, but they've done a good job. But T+2 or T+1, no, that's not efficient. And the amount of money it costs and the number of people that have to get involved. And I think there's like 7 different parties that touch the transaction. No, we don't need that. And so the evolution of the technology is now kind of caught up with, actually the technology was always there. People's perception of how to use the technology has caught up to how good the technology is. Mm-hmm. And so, Journey of 1,000 miles starts with the first step, figure, stock, first one, but there will be many, many more. And ultimately, I think it'll be all of them, right?
We're kind of getting some of the overall sentiments from ETH. We're in a biased crowd of folks, figuring out, as you mentioned, Mark, which I love the term, the flippening, if that's going to occur. One of the signals, which I'll also tease out in the chart of the week, I love my twofers, is this idea that we're looking at market signals. We're trying to determine, where we are in the cycle. Are we at the bottom? Or are we going to shed some more? And then one of the kind of interesting signals that we tend to see, and we talk about stablecoins a lot on the show because they are a pretty big deal. And it turns out that they have a lot of information content, Mark, as far as where we could be in the cycle. So the folks over at Kaiko, we like those guys. They're a market intelligence company based out of Paris. And they come up with these fabulous reports to look at on-chain data. And so if we kind of look at where we are now relative to the last kind of down market we had in 22, there's so many parallels that mirror this. And basically it kind of makes intuitive sense without getting too much into the charting, which we'll get in later. But the general sentiment is, if there is compression that happens in BTC, well, that trading doesn't just sort of go away or go into Microsoft stock. It will go into stablecoins. And then there's a first frontier that will be created or reached when it's deemed safe enough to now go back onto a more risk on asset like BTC. So it's pretty fabulous to kind of compare the two elements there, because we were also kind of thinking about, well, what does Clarity do for the midst of all of this? And now we're kind of thinking, well, it's stalled a bit, and that sort of caused us to go more into stable coins, ironically, because Bitcoin has come down, but that just can be this, snake in the grass, which all of a sudden can emerge.
Look, the snake in the grass is real. So just to finish up on the point before my internet went down.
Yeah.
So the protocol stack in the internet, pretty clearly defined. TCP/IP,
Right.
FTP, SMTP, HTTP, www. Great. Well, it doesn't map perfectly into the new web or the new internet, because Bitcoin clearly functions a little bit like a base layer, but then we haven't found the FTP equivalent. We thought Filecoin, maybe there's some other new protocols. There's nothing really for email and websites, and Ethereum really is a toolkit. So that kind of maps to the World Wide Web, but it doesn't really work that way. So really it's, okay, we're going to have all these L1s, and L1s, great. I mean, but how many do you need? Clearly having provenance to tokenize real world assets, that seems pretty good. But then you got this other thing over here that does stable coins, and ETH really is dominant in stable coins. But the biggest issue there is composability and the ability to cross chain, to move things across chain. Well, the bridges have been, how shall we say this, insufficient to this point, or stinky.
Yeah.
But Chainlink has been making some strides, and a few others. If that gets solved, that probably is the vision of the world, where we do have multiple chains, but they do interrelate using some sort of technology that isn't subject to hacks all the time, which has been the problem with bridges. Or it's just the one chain to rule all chains. And then which chain is it? And, Bitcoin, if there was good L2s and L3s, I could see it, right? I mean, and so we're still feeling that part out, but that's kind of the way technology works. I mean, there were 80-ish protocols in the 60s, 70s, 80s, up until 91, when really we kind of went down to a handful. And I think the same thing's happening now. And, we're only 10, 12, 14, whatever number you want to pick, years in. I don't know. We got time, but we'll see how it develops.
Yeah, Mark, maybe kind of changing gears a little bit and talking a little bit more about the kind of economic outlook. I must admit, I'm coming to you, Mark, because I'm slightly confused. I could have sworn in our last show, we saw some economic indicators that showed on the inflationary data we were trending in the right direction. However, new marks are in. We have multiple classes. I think about the economy kind of like grade school, right? We have a chemistry class, we have an English class, we have a history class, and something else. And basically all of those give us a sense of, are we a well-rounded academic individual, right? Same thing with the economy. So our inflation was okay, but we actually got back some of the Q4 data on growth. And it didn't look as rosy, as we kind of slowed sharply at the end of 25, and we ended up dragging down the year. So we got some of the new GDP numbers, and it didn't really look as once promising. I'm kind of curious, Mark, if we're looking at our academic report card about our economy, I think Bitcoin is part of that. Let's call that an extracurricular.
Look, I mean, if you
slow down at the end of the year.
I'm sorry, if you torture the data long enough, it will confess. And so people can tell a narrative any way they want by picking what data they talk about. You saw that at WEF, right? The president went over to WEF and he quoted the trueflation number, okay,
wow,
as U.S. inflation. Like, no, that's not U.S. inflation. It is an interesting tool and it includes things like food and energy, which inflation, CPI, does not. And so, he said, well, inflation's, less than 1.5%. Like, no, inflation, right? The number we talk about, either the PCE deflator, which is the one the Fed uses, or CPI, are somewhere between 2.4 and 2.6. But yes, the price of eggs and the price of cocoa and the price of coffee are collapsing. And part of that has to do with what you just said. And at the end of the fourth quarter, economic activity really slowed very sharply. Now, was that because of tariff nonsense? Was it because, people literally kind of ran out of money? I mean, one of the challenging things is this K-shaped economy where, look, all the things that rich people own, houses, stocks, private equity companies, they're all doing great on paper because the devaluation, which is different than inflation. Inflation, I will argue, is when prices rise. Now, again, I'm arguing with Nobel laureates on this, but Nobel laureates say inflation is always and ever a monetary phenomenon. So the only thing about inflation is printing money. And yeah, but to me, that's currency devaluation. And yes, you measure that in quote unquote inflation. But to me, the inflation number that we as humans, as market participants, really care about is the supply demand inflation about goods and services that we need. Like if I go to the grocery store and it costs me, $10 to get a jug of milk instead of $5, I don't care what you tell me the CPI is. That,
right.
I need to buy the milk and it's twice as expensive, or, steak or vegetables or whatever. But yet the CPI that they tell us excludes that number. Like, well, okay, but why would you do that? Well, remember what CPI is. CPI is really, it's just an index for adjusting entitlement payments. So if you have to pay people Social Security and Medicare and you have this escalator built in, you would like that escalator to be as small as possible. So you're going to exclude anything that's really volatile. So there's this challenge that people who are living day to day, particularly those living paycheck to paycheck, which is a large percentage of the people in the United States, they're feeling it. I mean, I was telling this story at the conference. So, my son made the lacrosse team. So we took him out for dinner to celebrate. Excellent. And the three of us, my wife and son and I, went to a taco place and we had tacos and they were good. And, he's a growing boy, so he orders more than the average person, but it wasn't like crazy. And, he's 15. And so, but the three of us, the bill was $100. And I'm like,
for tacos.
And I'm like, that's crazy. And that's not New York or Paris or London. It's Chapel Hill, North Carolina. So come on. But I struggle with this whole, there's no inflation and economic growth is great. Most of the economic growth in 2025 was just accounting for building these big warehouses full of GPUs. Oh, okay. I mean, yeah, that is growth. I mean, we did, and I should, it is growth, right? We spent money to build things, and that money then goes into the hands, of electricians and contractors and cement people. So there was but the problem is then those people are having to spend so much to buy things that the velocity of money, which is what really determines economic growth, is like if I get $1 and I go get a haircut And then that hair cutter goes to the store and buys some meat. And then the storekeeper goes in and buys a shirt. That velocity of money is what really creates the economic growth. But if my barber has to pay his bills because, interest rates went up or electricity prices went up, that's the killer, right? Electricity prices went up because we're building so many of these big warehouses to, make cat videos on the internet. And that actually crushes the velocity of money, so you don't get a growth. And that's the element of where I think the problem is. Like, if you looked at a whole bunch of indicators, number of jobs that just got decimated. Look at all the revisions to, we created all these jobs. Oh yeah, we recounted and we didn't. Or the number of people, the big tech companies that just laid people off because they're using these AI agents. Or the fact that the tariff wall created a real problem for small businesses that couldn't get, like, silly, not silly, but small little examples. There's a little company here in Chapel Hill, spun out of the university, and they basically buy these really cheap but really good robot arms from China, and then they write the software to make these arms do things like, cook French fries or whatever. And pretty good idea. Well, all of a sudden, your input isn't so cheap. So now you can't produce as many sales because the people are like, well, I don't know if I trust the Chinese one. I think I'll just buy the Japanese one, even though it's more expensive, because now the gap isn't as big. And so that type of stuff is real, and it's rippling through the economy. And I can make a case, actually, with pretty good data. I don't even have to torture it very much, but I could make a case that we're in a recession. Unless you're in the top 1%. The top 1% is not in a recession. They're feeling good. They got lots of money. They can take nice vacations. But the rest of the country, I could argue, and I'll give you a good example of that. So if you look around Denver, where I was, it's pretty low key. Now they've had a bad ski season, so that's part of it, the snow. But the fancy restaurant that we had dinner at on Wednesday night, packed. I mean, $100 a plate steaks, packed. So the top is doing great.
Yeah. And I think, kind of diving in a little bit and closing on that point about, what some of the numbers revealed. We had a growth rate on GDP to close out Q4 at 1.4%, a significant slowdown from 4.4% in Q3 and below the 2.5% consensus estimate. So
but X,
that definitely
wait, X. You said 1.4.
Go for it.
Right? GDP now, right, which is the Atlanta Fed and everybody looks at that one. That was up over 5% like 3 weeks ago. I mean, wow. So to come in at 1.4 instead of 5 is a massive change. And to your point, the consensus was 2 something. And
2.5. Right?
They were double that. And to come in at 1.4, and that means for the year, we were probably sub 2.
Yeah, for the year it was around that number, where basically, things like the shutdown didn't help towards the end of the year. And of course, interest rate data was a little bit weaker. So then it kind of reminded me
about that. A year ago, we talked about how 2025 was feeling very much like 2001.
Yep, exactly.
Minus the big attack on but it felt very much like 2001. Well, why? Well, 2001 first quarter was negative, second quarter was positive GDP, third quarter was negative because of the 9/11 attack. And then fourth quarter was pretty mediocre. It was positive, but mediocre. And so for the year, we ended up at 1% growth. And then the next year we declared, not we, NBER declared that, oh, we were actually in recession. And was like, how can you be in recession? It was positive growth. I'm like, well, anything below stall speed, which is right around 2%, is right in the, you can call it a recession or you can not call it a recession. And I would argue that says we were in recession. And the only thing that would say that we weren't was that one good quarter of growth that was 50, 60% based on AI data centers. So I don't know. We'll see.
Yeah, you were almost spot on, Mark. I think the number was like 2.2% on the year. And of course, that was lower than 2024's 2.8.
Yeah. And anything around that 2%, 2% is kind of like built in, right? Because you got working age population growth of, just under 1%, and you get productivity of just under 1%. So kind of base level is kind of 1.8-ish. And so if you're not making 2% growth, you're not really doing very well. And if you're not significantly beating that 1.8, you're really not doing very well. So that's a far cry from the 4 or 5% growth that, again, the president and other people in DC were touting not 3-4 weeks ago.
Yeah, no, Mark. And also one of your points that I thought was pretty important and resonated with me was the K-shaped economy comment. We actually profiled that in one of the charts of the week where we looked at, what does this mean for purchasing power and economic numbers? Actually, we can even make it more micro than that. So if you were to venture a guess, Dollar Tree, which is a very interesting economic indicator just based as a business, last year its growth, its fastest growing segment were earners of over 100K, 60% of new customers were there. And now guess who is joining the club? Walmart is saying that share growth is driven by 100K earners. Lots of people shop at Walmart, but I'd say, from their own numbers, a lot of their growth is coming from people that are a lot of their base is below 100K. So basically now that K-shape is moving in.
That is an amazing stat. But what it really just says is our dollar, our currency, is under attack and has been under attack, which is why owning stores of value, Bitcoin, gold, whatever you want, that is outside the currency system, not for all of your wealth, but for a portion, is so critically important. Because the idea that the magic 6-figure level is now not the poverty level, Mike Green did that analysis, and it's fine. And Mike's a great writer, and it got a lot of views, but that's not poverty, right? But because shopping at Dollar Tree or Walmart does not mean you're poor. What it means is that the dollar's not going as far as it used to. And, the one that's probably the most egregious example of that, I'm old enough to remember, although I was, just born, but in 1964 was the last year they printed or coined silver quarters. And I was born in 63. So 64, they stopped, using pure silver for coinage. And at the time, 5 silver quarters, right, was minimum wage. So minimum wage was $1.25. And with that amount of silver, you could buy, I think it was like 1 point something ounces of gold. I can't remember the exact translation. And you fast forward to today, the minimum wage is $7.50 or something like that. and there's no silver in the coins. So that's all you got is the 750. You can't convert it to silver. And gold is $5,000. So look how little gold you can buy and how many hours you would have to work to buy an ounce of gold. And that's theft, right? That's this illusion that somehow inflation or the devaluation of the currency is good for us. And it's just not. Now, the one thing that is happening, although this got a good and a bad, deflation is happening everywhere with technology. Whether it's how much better your cell phone is or how much more big screen TV you can buy for a certain amount of dollars, everything that technology touches is deflating, right? It's getting better. The problem is now with these AI tools, that is including some of the things that people get paid for. So, if you were a person who, was paid for your knowledge, like a lawyer, like an accountant, like a investment banking analyst, that's getting tougher and tougher. And that kind of deflation, that hits you right in the pocketbook, or you may be unemployed. And what that changes, and I thought, Naval had a tweet about this that's gone viral in the last couple of days, that he said, look, careers are dead. That's a little extreme, but he's kind of right? The idea that you work for a single company for 40, 50 years, get the gold watch and retire, that's probably gone. He said, jobs are under attack, but opportunities are on the upswing. And basically what he's saying is these tools that everyone's afraid of, if used properly, can make you a superhero, right? Can make you a super creator, can make you a super provider of synthesized information. Like the fact that a computer can calculate faster doesn't mean it knows what to calculate, right? You need intuition or creativity to know that. And that's why the other thing he says is, AI fails every test of intelligence, every single one. Right? There's not one that actually. So not only we're nowhere close to AGI or even ANI, but it fails the tests of intelligence. So it is artificial, but it's not really intelligent. But it's good at certain things. But a human using those tools can be a superhero. It's kind of like, we all remember John Henry, right? Where he went up against the steam and he had his two, hammers and he's going. Yeah, if he had better tools than just sledgehammers, as great as he was, as powerful as he was, he could have beat the steam engine. But eventually the steam engine replaced the need for a guy with sledgehammers. But that doesn't mean that now newly retired railroad worker can't go find another job that is created by the fact that once we laid the railroad tracks, growth went crazy and the number of jobs went crazy because now we didn't have to spend so much labor, building the tracks. We could do other things, but it does require retraining and it requires, education and
yeah. And then I guess it kind of also goes back to the whole idea of general intelligence, Mark, about how, you can't program a computer to come up with this. While you were saying that, it reminded me of this awesome documentary I was watching this week. It kind of showed how one man can make a difference. They went over to Bulgaria in the Balkans, and they showed how one man who was devoted to physics created a new school, and he produced, an incredible amount of high achieving physics students that went all over Europe and all over the world competing at the highest levels. And he just found kind of an abandoned Soviet era place and created it as an elite institution for kids. Incredible. And he's like in his 70s and he's got so much passion. So it's one of those things where you can, kind of flip the script on that. But to the idea of storage of value, we've teased it out long enough, Mark, and have thought about how bad could this problem be? No, on the other side, how good could it have been if you had invested every single time? Bitcoin was supposed to die over 400 times, which is a long, slow death. So we will share the screen, and I like this chart, Mark, because it's interactive. So take a look here, and we can kind of get some of your thoughts. And there's actually a database called we'll link this up here. The number one database for notable Bitcoin skeptics. Bitcoin is dead. So this is right on brand.
Yeah.
Let me bring this down so we can see the axis a little bit more. But the short answer is that if you would have put $100 every single time when the faith were low, you would have, Mark, over $98 million today, which is insane. Of a number.
It's
so we can kind of look at
it's
this.
insane. And look, yeah, most of that is, from those early days when you're buying it for nothing. But still, if you just did it, and the fact that so many people want to say it's dead, right? Which is why I went back to the Genesis block stocks. Technology that passes the Lindy test, right? That doesn't die. And there are plenty of technologies that do die, but a technology that doesn't die, the longer it lives, the longer it will live. And that's exactly what's happening here. Is in the early days, right? Way on the far left-hand side of the chart, it was a reasonable story to write, why this is going to fail, right? There's just no way anyone's going to adopt it. And this is, drug lords and Silk Road, and fine. You know what? And, an anonymous founder. What if it's some, bad person? Okay, great. Or a bad actor, bad country. That's fine. That's reasonably logical. And to be skeptical in that period from 2009, 10, 11, and most people didn't even know about it. But then, when you get into that next period where, okay, now it's had the miracle, right? The miracle to me was when it went from 0.03 cents to $1. Mm-hmm. That was the miracle, right? The fact that it survived those first 4 or 5 years. So I don't even really count those, because it was basically free. Like you could get 25 Bitcoin just for going to a website and clicking a button so they could get your email. Or you could, put a little thing into your computer, your laptop, a little USB thing, and it would mine 50 Bitcoin for you in 10 minutes. So there was no competition for mine. It was great. But then you get into the next phase, right? That first phase from 2009 to 15 was the first they ignore you phase. Nobody knew about it. Nobody paid attention. Not nobody, but very few people even knew about it. Then you get into this period from 16 to 21. Well, then they just laugh at you. And that's where, it's easy to say it's dead. And the funny part is as it's going up from, $100 to $1,000 to $10,000, to say it's dead then makes no sense. I mean, you see that parabolic move in the middle of the chart. Okay, on the other side of the crash, fine. But when it's going up, to say it's dead is kind of really stupid. After the crash in 2018, when it got all the way down, you see that that last drop in November of 2018. Mm-hmm. I mean, I remember it well, right? It was $6,000. We're like, oh, can't go down any further. It gone from 20,000 down to 6. And then like in a couple of days, it went to 3. And holy moly. And again, I went back on CNBC just because I'm a glutton for punishment. And the host says, so I told you this thing's going to 0. I said, no, in fact, it's not even, not only is it not going to 0, but we just issued the, Morgan Creek Bitcoin Challenge, and we'll take on anyone over the next 10 years, right? $1 million charity bet, anyone. And people have heard my story. I mean, I literally called Warren Buffett. He answered his phone. I talked to him. He thought about it, sent me a nice letter saying, no, I'm not going to do it because I won't be around to collect. I'm pretty sure you'll be around to collect. But anyway, someone told him not to do it. That's fine. But no one else would do it either. We had one guy who said he would do it, but his son talked him out of it. He says, there's no upside. If we lose, we're supposed to lose. I mean, if we win, we're supposed to win. If we lose, we look like idiots. No, we're not doing it. So no one took our bet. Now it's a good thing because Bitcoin has crushed the S&P since then. But again, as you're going up the parabola in 2021, to say it's dead when you go from 20,000 to 40,000 to 60,000, that's just dumb journal. Actually, that's not dumb. What that is, that's clickbait, right? That's just people trying to get clicks because negative news gets more clicks. Now, the fall, right? Oh, okay, fine. You want to say it, but it didn't fall all the way. It fell from 60 down to 15. I mean, that's a pretty big fall. But even with Sam going to jail and all kinds of nonsense, bad people doing bad stuff that had nothing to do with the technology, it didn't die. And so now here we are today at 66,000, whatever it is. It's not dead. It's not gonna die. And it is the future of money, right? Money is an asset that exists in the absence of a liability. Gold has been that. Bitcoin is just a better form of gold. Now, it will also be the base layer of money the way gold is, and we'll build monetary value on top of it, payment rails, stable coins, all these things. They're just coming because the technology's better.
Yep. And there's some awesome money quotes in here. When you were mentioning Buffett, there is actually a quote here, if I can find it, from his longtime pal.
Oh, Charlie Munger. Yeah, trading in Bitcoin is like trading newly harvested dead baby brains. I'm like, oh my God, Charlie, really? And
he went off the deep end. Yeah,
but it's like, why did he say that? Well, one, he's trying to be extreme to make a point, but more importantly, most of his portfolio at that time, or their portfolio, he and Warren, was 47% financial services. And financial services, look, financial services, it's a $7 trillion industry annually. $7 trillion annually.
Jeez.
We don't need to spend that much. Like, I don't need to have a bank account where I pay fees, and I don't need to pay for a wire transfer every time. If I hold Bitcoin, I can have monetary value that I can send to you anytime I want. And that's a better system, and it obviates the need for banks. That's why the banks are fighting the Clarity Act so hard. They labeled Brian, public enemy number one. It's like, oh, that's just so ridiculous. But it's because, the head of Bank of America said it. Yeah, $4 trillion would leave the banking system, and that'd be a disaster. Yeah, in the short term, it'd be a disaster. But in the long term, it's better for humanity.
There's the money quote, Mark. I was trying to search for on this. I'm not sure if it's coming up, but on May 1st, 2021, Bitcoin is disgusting. I don't welcome a currency that's so useful to kidnappers and extortionists and so forth, nor do I like shuffling out the extra billions of dollars to somebody who just invented new financial products out of thin air. Charlie Munger, if you bought $1,000 worth of Bitcoin at that statement, it would be worth $1,700 now. And then, of course, Mark, not to be outdone, Jamie Dimon, speaking about the head of large banks in October 11, 2021, said, I personally think that Bitcoin is worthless, which is very, very clear. And then now it'll be worth $1,700. So, this is fun to play around with. Obviously, we kid here because I think a part of it is like, you also can't take this stuff too seriously, Mark.
Right.
When, people are calling that. I think like what happens in our communities is like people will get very impassioned into their epistemology, and then they will kind of really kind of lose sight of the broader picture here of U.S. currency is devaluing. U.S. soft power is devaluing. We have an opportunity to either fight this, or we can figure out alternatives as we look at the next wealth transformation. Yep. And this is one. We have many others that we talk about, but I just think that this is the kind of a cute way to poke the bear and maybe learn something while you're at it.
Amen. Love it. And I love the interactive part of the chart of the day.
Yeah, well, we'll probably wrap on that, Mark, and of course remind our listeners as always to rate, review, subscribe. We're so close to that 1,000 mark, And as always, to stay current.
All right. Thanks, X. Have a good one.
Thanks, Mark. Enjoy.
All right.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.